PMI to be announced this morning, we actually expect January PMI to slow down a bit from December. And part of the reason is the seasonality. Because in the Chinese New Year keeps changing from one year to the next. And this year, Chinese New Year, January 29th, is relatively early. And what that means is that workers may be leaving for hometowns for the Chinese New Year holiday, therefore impacting the reading of the January PMI negatively. So we are expecting manufacturing PMI, the official NBS one, to be 49.8, somewhat lower than the December reading of 50.1 you were describing.
So we are coming up to the two sessions event in March, Hui Shan. What then, at this point in the cycle, do we need to see from policymakers in terms of further stimulus that's really going to help rejuvenate the Chinese consumer and restore their confidence?
Yeah, at this juncture, the private demand has been weak, and cutting interest rate is helpful, but by itself is not going to create significant enough demand pickup. So the hope is for fiscal policy, government spending to generate demand directly, and that would boost activity and support inflation, and therefore translate into more confidence and private demand, including both consumption and investment. So our expectation going into the two sessions in March is that the budget deficit will be increased from 3% last year to 4% this year. And in addition, there will be more local government special bond issuance quota and central government special bond quota. So altogether, we're expecting a sizable increase in government bond issuance, which will be used to finance government spending. So the whole picture is that we need demand. And at this point, the one place that can generate significant amount of demand directly and timely would be the government spending. So that's what we're expecting.
Yes. And at what point then, Hui Shan, are those policy measures really going to bite and really going to start to stabilize the debt deflation spiral?
It is a somewhat of an uncertain path forward, not only because thinking about 27 months of negative PPI inflation to get us out of the sort of PPI deflation takes a lot and might take a while time-wise to get the psychology reversed. And on top of that, we're facing more uncertainty around the Trump tariff narratives.
Yes.
We don't know when and how much China may be facing higher tariffs. So I think the problem in China domestically alone creates some uncertainty, and because of the external the factors that we cannot predict precisely makes this a very difficult sort of thinking about when the turning point will be. But the bottom line is we do need a large stimulus from the government to even have a chance to improve inflation, improve confidence.